I think it's going to be me, Tyra.
Oh, Tyra, sorry. Yeah,
No, you're
Alicia
good.
was with NRCS. It's the
Yeah,
end
I
of the
don't.
last day, and so I guess I'm slipping a little bit.
Yeah, no, that's what I was going to say. I think I'm the last one. So I'll try not to put you asleep or wake you up if you are already there. But um, my name is, you can see everything, correct? And hear me.
Yes, I can hear you and see your slides just fine.
Great, thanks. So yeah, my name is Tyra Jackman and I am a farm loan officer trainee. And as for who the FSA is, we are part of the USDA. And then Cliff kind of told you a little bit about our program side there. And I'm going to talk today more on the loan side, which is where we provide progressive credit to producers with the goal of having them graduate to commercial credit. So if you are a farmer or rancher who is unable to obtain credit from another lender to start, purchase, sustain, or expand your family farm, you may be able to get a loan through FSA's farm loan programs. We have a couple different types of programs depending on what type of loan is needed. Up first, we'll talk about guaranteed loans. This is where the borrower goes to a commercial lender like Ben with Western Ag Credit there. And they are willing to lend. However, they want FSA to guarantee the loan amount, meaning if the borrower defaults, FSA will guarantee up to 90% of the loan amount. Guaranteed loans can also be done in a few different ways. We have what we call our easy guarantee that can be up to 50,000 or 100,000 depending on the lender. And then guaranteed farm ownership and operating loans that are limited to around 2.2 million. Ben talked on these a bit also, and the only difference I really noticed is that his numbers were lower than what we've currently been updated to. The next program is what we call direct loans, where FSA is the lender, and we offer farm ownership loans, operating loans, microloans in both those categories, and emergency loans when designated. Under direct farm ownership loans, we have a few options. First is what I call regular, where FSA loans the full amount as at a fixed rate and a 40-year term. Second is the participation loan, where FSA will finance 50% of that loan, and the remaining 50% will come from another lender, also with a fixed rate and up to a 40-year term. Third, we have the down payment loans, like Ben mentioned. Direct down payment loans will not exceed 45% of the lesser of either the purchase price of the appraised value or the appraised value of the property. Down payment loans have terms up to 20 years with a fixed rate. You must be a beginning farmer, socially disadvantaged, or a veteran to qualify for the down payment loans. And last, under direct, we have farm ownership microloans, where we will lend up to 50,000 for up to 25 years at a fixed rate. The interest rates change often, but currently the interest rates for the regular farm ownership is 5.37%. The participation is 3.375%, and the down payment rate is 1.5%. Those change roughly monthly, so we'll just always check when you're filling out your application. Then we go into direct operating loans, where we have a limit of $400,000 with a fixed rate and a term of 1 to 7 years. Micro operating loans, where we max out again at $50,000 fixed rate and a term of 1 to 7 years. And then emergency loans will either be given the amount lost or up to $500,000. They will have a fixed rate, but the terms can vary. And then we offer youth loans for kids normally in high school, middle school, doing, ag programs, things like that, that can go up to $5,000 for a 1 to 7 year term at a fixed rate. And again, the interest rates are changing often, but currently for operating loans, microloans, and youth loans, the interest rate is 5.12%, and the emergency loan rate is 3.75%. Eligibility requirements differ for each type of loan. What I'm about to go over are some very basic across the board things, but our regulations will trump what I'm saying today. These are just to give you a rough idea. Those basics being, we look for good credit history. If the borrower is unable to obtain credit elsewhere, managerial experience, which is usually identified by education in the form of an ag degree or farm management curriculum, or on-the-job training where the applicant has had management responsibilities for at least one production and marketing cycle. Owner and operator. At the close of the loan, the applicant must be the operator of the farm. And then family farm requirements. A very rough description would be you're larger than your backyard garden, but smaller than a fully hands-off operation. The physical labor and management must be provided by the applicant and family. Hired labor can be used to supplement or at peak times. Talk about microloans. The microloan program was developed to better serve the unique financial operating needs of beginning, niche, and the smallest of family farm operations. The application process for microloans is much simpler, requiring less paperwork to coincide with the smaller loan amount. Requirements for managerial experience are modified to accommodate smaller farm operations, beginning farmers, and those with no farm management experience. To qualify as a beginning farmer, we have some pretty set rules. The borrower must not have operated a farm for more than 10 years, meets the loan eligibility requirements for the program which they are applying, substantially participates in the operation of the farm. If applying for a farm ownership loan, the applicant must not own more than 30% of the average size farm in the county at the time of application. The amount owned may exceed 30% after loan closing. That sounds rough, but if you apply and it comes down to it, that's something that we can easily figure out and work through. And then also with the farm ownership loans, the borrower must have participated in the business operations of a farm 3 out of the last 10 years. These following experiences can substitute for up to 2 of the 3 years. So 16 hours of post-secondary education in an ag-related field, successful completion of a farm management curriculum, 1 year experience as a farm laborer with substantial management responsibility, successful completion of an internship, mentorship, apprenticeship on a day-to-day farm, significant business management experience, honorable discharge from the armed forces, successful repayment of a youth loan, or an established relationship with a counselor in the SCORE program. Now, this is just kind of give you some rough ideas of how our loans are laid out. This is a $400,000 operating loan at a 7-year term with our current interest rate. So you see there the $400,000 at 5.13% over 7 years, and we do yearly installments, which would be $69,441 a year. And we'll go into a farm ownership loan at a 40-year term at our max amount of $600,000 at the 5.83%. Over 40 years, again, yearly installments at $36,781. Just to kind of show you what we see, what we look at there. And then just some things to keep in mind regarding, this is like Ben spoke about a business plan, and this is essentially what this is, just kind of, we require one too, a little bit different, but these are just questions to help you go. So you must be producing an agricultural commodity. It's pretty basic, but it just has to be ag related of some sort. And then what are you going to produce? Our general rule, like when we're asking a producer, we follow food or fiber. If it fits into those, that's pretty good. Where are you going to market your products? Whether that be farmers markets, auctions, local buyers, we just have to keep that in mind. And then how are you going to repay the loan? What we really like to see is that the commodity that you are producing will pay the loan payment. And then what are your goals for the operation? As I mentioned in the beginning, our goal as FSA is to have the borrowers graduate to progressive credit. So how are we going to do that? Is that going to be through increasing sales, scale changes? Just a couple things to keep in mind there. Here I have a screenshot of what the farm loan program's webpage looks like. I will drop that link in the chat, but also if you just Google USDA farm loan programs, it brings you right here. And there's just a lot of really helpful tools. The loan assistant tool there will walk you through and helps you kind of decide what loan type would be best for you. And then you may even be able to start the application process online. There's tons of useful information if you have any questions about stuff that I said today. And then with that, though, there is my contact information and you feel free to reach out. I am a trainee, so I've also listed my manager because most everything that I do still goes through her. But yeah, that's kind of it for me. I didn't want to keep you too long and hopefully no one fell asleep. But
Thank you. This has been great information. I didn't see any questions come in the chat. So it probably just means that you were super clear in what you're doing.
yeah,
But what going back to some of those requirements that you were talking about, like extension courses and some of the other things that people could do. For extension, we have programs, like this conference that's a few days. We have, like half-day things, and then we've got some online courses, and some of those are like 3 or 4 hours, and some other things. For like, extension course or something else, what breadth or, how long or, what are you really looking for stuff like that?
So I would say that as long as we can like prove that they've done the course and they are like had significant knowledge improvements in the managing of a farm and the way like the production's going to go, I would say that we
Okay.
would make it
Uh,
fit.
Can I throw in real fast?
Yeah.
Yeah, and I was going to say Cliff will know a little bit more. He's done loans longer than I have. So
If there's anything that we would like to get approved, then what we have to do is we have to run it through our farm loan chief. And so what we need is like what the materials that would be covered, and then he could actually make the decision of whether that could be accepted or not. And so,
Okay. Because I was just thinking that it might even be like a suite of, activities within extension or something that would be more appropriate than, some of the individual programs.
for sure.
And then, so how soon should you go start talking with FSA? So suppose that I'm wanting to farm, I've got my dream, you know what I mean, and different things and stuff. When is the right time to really kind of start the conversation?
so you can see there like our like the requirements that we have. I would say it's good to start like as soon as you have the idea that you want to start farming, come to us and understand what we require of you, and we can sit down, we can have a meeting and say that like you're going to need these trainings, you're going to need these different things. And I haven't seen it so much in the state of Utah, but back east a lot of the times we would like connect people with the SCORE program, and that would help them like get that experience that way. And once they had an advisor, we would go that way. But yeah, I would say right off the bat, at least understand what we're working with, and then we can go from there. Like I have a guy who came in and he has no experience, but he wants to get started. And so then we kind of just laid out what he needs to do. And now he's actively trying to find ground to lease so that he can start his farming operation, so that he has at least a year under his belt. And then he can come back to us and we can go from there.
This was a question that came up a lot this morning in relation to, the various grant programs and stuff that were out there, but it might be good just to kind of bring it up here. Sometimes we talk about these programs and stuff and people assume that they're more just for the rural areas of Utah or larger. How small of a farm operation can you be and still use some of these programs?
This might be a good place for Cliff to jump in also, but I would say that we size, you can be as small as like 1 to 2 acres. I think as long as you're producing a commodity and are able to, qualify in what we said and the payments can be made, then.
So what about like a half acre or quarter acre, like cut flower operation where they're growing flowers and selling those, something like that.
Yeah, that's where Ben commented earlier about cut flowers kind of being an issue, and it's kind of why we follow like the food or fiber. It's easy. Sorry, Cliff.
No, you're good.
Yeah.
So everything's kind of based around an income basis. So because you get different sizes of operation, like 1,000-acre dry farm versus 2 or 3 acres of cut flowers could end up being about the same amount of work and really the same amount of income sometimes at the very end. And so everything's kind of based around an income of, like Tyra was saying, can it pay its own way? Is it a viable business, or is it a hobby? Meaning, is it producing income? Is it something that is being used as a business to provide income, food, fiber, or I think cut flowers are actually an eligible commodity too that we can work with. I'd have to go back and look on some of that stuff. But if you do have a question or somebody has a question, I would say to come in, because sometimes we don't know the answer, and sometimes we have to go to our national office and find out whether that's something that they feel is appropriate. So we try to make everything fit that we can.
Okay. And yeah, because sometimes I think that the programs I think your point of it's not really about a size of acreage, but more about, the profit and the viability of the operation or the potential for profit. And you know what I mean, sales and things like that. So they are nice people as with everybody else. And so I think the answer at the end of the day with everybody is don't feel afraid to go in and approach their offices, sit down with somebody in your local office and stuff. And maybe we should end this part with FSA about, well, I think you've already put it in there. So Tyra put in the chat a link to the FSA farm programs and then also her contact information. And so if they're in a different area of the state, should they still kind of start with you, Tyra, or is there another contact that they should look at to talk about?
So the farm loans, we are kind of spread up. Like in each county, we have a little bit different, but just for the ease of things, I would say connect with me. We can find out where you are and I can get you with the farm loan officer in your area. It'll just keep it smooth and a lot easier that way. If you do search, I see someone put in Utah FSA, you can go right there and you'll be able to click on your county and it'll tell you who your farm loan officer will be.
And you put, and so that was the link that you put in the chat, right?
I believe, is it Kendra?
Okay.
Kendra? She put
So,
it in.
and then we did have one question that came in the Q&A. Are FSA loan rates available online, or is a phone call required? Are the rates established locally, statewide, or nationwide?
So they are nationwide, and I do believe you can find them online. We get it emailed to us, and that's honestly something I've never looked for. But Cliff,
yes, they are.
Okay. I'm like, where